Well, howdy there, ladies and gentlemen. Let me ask you a question. Do you know how to identify when a stock market is drowning and it's fighting for its life versus a stock market that's doing very, very well and is very, very healthy? Well, I have something very interesting to show you here today because we have a stock market that is doing one of those things right now. And I'm going to show you exactly what's going on here, how to identify this in the future. We'll also talk about some stocks that I need to talk about at the front of this video as well. From there, we'll discuss a big move I'm making in my private group to let everybody know that. From there, I want to talk about the stock market of 2018. You've heard me reference 2018 many times over the past number of months. So I want to go ahead and talk about what the market did in 2018, how it's similar to what we're going through right now. From there, we're going to react to this video, Oracle to deploy 50,000 AMD chips. I'm looking forward to reacting to that one, sharing my opinions and perspectives there. Stacey Roskan, his views on the AI cycle, where we're at here in regards to this. And then Tom Lee went on CNBC, looking forward to reacting to everybody's favorite bull, Tom Lee. Appreciate y'all for joining me as always. Got a lot to go through in this video, so I just need to get straight into it. There's just one thing and one thing only I need from you guys before we do that. If you could please just hit the like button on this video. If you could just make that thumbs up button glow, you are my hero. Everyone that has already done that without even me asking, you're the best, okay? Additionally, if you enjoy my content, you want to see more of my videos in the future, make sure you're subscribed here to the channel. If you're subscribed, higher probability YouTube will show my videos to you in the future when you go on YouTube. If you aren't subscribed, lower probability. So make sure you're subscribed here to the channel if you enjoy my content. Alrighty, folks. So right off the bat, how do you identify a stock market that's drowning? Okay. Well, if we look at, for instance, the market over the past, I would say over the past year or two, what you would have is any time the stock market would try going down, it would seem in the last 30 minutes to last hour of trade, suddenly like the market would somehow go green, right? And it would be like, dang, that market looked like it was going to be red today. It looked like it was going to be Red Dead Redemption. Somehow we eked out a green day, right? And if you've been in the market, especially, say over the past 6 to 12 months, like that's a lot of what we have gotten, right? But a thing finally happened here today that I've been waiting for this thing to happen because, it's one of those things that usually when you start to get into more of a cautious bearish market, this is something you usually identify. And what we had here today is essentially the market was just rolling around, right? It was going up, going up. It was looking like, okay, we're going to eke out a green day here. And then in that last 30 minutes to hour, it just tanked. It just tanked, right? And that's what you have happen when you're starting to get into a more cautious, weaker market. People start getting more uncertain. They start wanting to take profits. They have profits on a day, right? Remember, the stock market's not made up of just people like me that are investing in stocks for the next many years. It's made up of a lot of traders getting in, getting out. These people want their money and they want it out, right? And so in the market, essentially, you have these certain time periods where all of a sudden people are like, if I got a green day, I'm getting out of this thing because I don't want to hold till tomorrow because tomorrow we're probably going down, right? And so that becomes a viewpoint. And so this is a very important thing to kind of identify here when you start getting in the market like this. You're starting to get really, investors, traders in general are starting to get really cautious on the market when they're like, I don't even want to hold this thing overnight, right? I just, if I got a green day, I'm taking it right out. So that's a phenomenon we have going on right now, right? Now, looking out there, it definitely seems still like really uncertain. There's no panic. There's no panic in this market right now. There's no big fear in this market right now, but there is uncertainty. There is cautiousness. And you can see that in the way the indexes are starting to act, right? And additionally, you can see that even with things like crypto, right? Like Bitcoin, it's having trouble holding gains. Ethereum's having trouble holding gains. Like if it has some green momentum, it kind of sells right back off. So you have that going on. Oil's continuing to flounder. Oil at $58 here. That's screaming recession, right? There was even a lot of stocks that had trouble holding gains. AMD had great news today, great news, and it just couldn't hold it. It just couldn't hold. I mean, it still finished green. It finished 0.7%, but this stock should have been up easily, 3 to 5% today. And it just could not hold those gains. Everything that had bounced all the way to 224, almost 225, and then just sold right off to 217. If you look at NVIDIA, same exact phenomenon happened today with countless of the big tech stocks. But NVIDIA being the one that really comes to mind here, where it's just like, look at NVIDIA. It opened low, it came back really strong, and then it just dropped, just straight down. So you have a lot of that going on. Salesforce continues to be weak in the short term. That one's a huge buy, in my opinion. Huge buy. I love that stock. I would love to buy every share in sight for the next, I would say, 6 months on Salesforce. I'm just going to continue to load. Don't be surprised if I buy that stock nearly week in and week out in this market. If we look at housing stocks here today, those ones all were nicely green, but man, those ones just, every time they get a green day, they get another 2 days of red followed up. So, although it's green today, don't be surprised if all of a sudden it's suddenly massively red tomorrow in regards to those. As far as my possible buys, watch list here for these ones, I plan it on there. I have Salesforce, I have Amazon. I love Amazon here. I have Adobe, I have Nike, I have Google, I have RH, I have Bath and Body Works, Cheesecake, Cava, SoFi, Whirlpool. Some of these stocks I'm waiting to see if we get this downtrend like we had in 2016. If we get that, then that's when I'm going to go ahead and step in some of these stocks, like a Cava, for instance. Like if this market gets really weak, Cava's going $40, right? If this market gets really weak, Bath and Body Works is going do-si-do, 22. If this market gets really weak, RH is going 125, maybe even under 100 if it got really, really weak, right? So some of these I'm kind of like waiting on. A Whirlpool, if this market got really weak, Whirlpool could go 65. So some of these I'm not in a big rush. Like something like Google, I feel comfortable buying right now. Adobe, I feel like fine buying that one right now. Amazon, I feel fine buying that one right now. Salesforce, I'm jacked up to buy that one right now. Cheesecake, I'm fine to buy that one right now, right? But some of these other stocks, I'm like, we need more downward moves before I could say, you know what? Yeah, let's go ahead and let's buy some of these guys, okay? Now, before we get into 2018 and what happened in the market in 2018 and how it's kind of similar to what we're going through right now and how to understand this market over this next 2-3 months here, big change to the private group I need to let everybody know about, okay? So, effective January 1st, 2026, if you want to join the private group, you need to have a minimum net worth of $100,000. So that's something to keep in mind. That will be going into effect January 1st. So if you have less than $100,000 net worth, you have about 2 months roughly to get inside my private group. But once January 1st hits, you'll have to have $100K or more net worth to get in there, okay? Now, what's going on here in regards to the market and what we're going through right now versus 2018? So I wanted to show you how the market acted in 2018 so everybody can understand this, okay? So the first thing you got to understand is the market didn't just go straight down, okay? It wasn't like, every day, every week, it was obvious like the market was going down. That caught a lot of people off guard, that market, that particular year, right? I just want to back this up for a 1 month here and maybe even over to a 5 day, because we recently had peaked in regards to this market here on the 10th. The 10th was a peak there, right? Yeah, 10th was a peak. So the interesting thing is in regards to the market and what happened here is you had an initial downdraft, right? And then you had a comeback, all to go lower. And what you had is a phenomenon called essentially lower highs and lower lows. Every time the low got even lower. Every time the market started climbing back, the high was even lower, right? And so look at this. You had market goes there, market goes here. We go even lower, a lower low than the previous low, right? Then the market tries to come back, but it's a lower high than the previous high. Then we go even lower. We have a lower low than the previous low. Market tries to come back, and it's a lower high than the lower low. And that phenomenon just continued all the way until it ended, which was right around roughly the day before Christmas, essentially. And so just understand this is the sort of market we could be in this next 2 to 2.5 months, where it has these moments where it looks like, okay, we're going to come back, but the back is not as good as the previous back was. And then it looks like, oh, crap, we just busted through the lower low that we had just a week or 2 weeks ago, right? And so the overall trend goes against you, and it goes against the market and just continues to go lower and lower and lower. And that's easily what we could have happen over this next few months. There's no guarantee, but it easily could happen. And I think it's important everybody understands that this phenomenon, could easily go on here. And it doesn't mean every single day or week's going to go on. It's going to give you false hope. If you're hoping for the market to go up short term, it's going to give you false hope thinking, oh, okay, we're coming back, all to go lower, right? And this is just a great buying opportunity because you continue to get these market drops, where as long as you're a buyer, you have cash, you're just loading up on shares left and right. And it's a beautiful thing, man, because you get these unbelievable deals. Okay, speaking about deals, Oracle to deploy 50,000 AMD chips. What's going on here?
Tech Check. Our Seema Modi's live at Oracle's AI World Conference in Las Vegas. Morning, Seema.
Vegas, baby. I'm in Vegas.
Morning, Carl. Yeah, this is big news. Oracle will be deploying AMD's latest artificial intelligence chips to build out a new supercluster to help customers run larger, more complex AI models in the second half of next year. I spoke to a number of Oracle Cloud executives on why they decided to partner with AMD this time over NVIDIA. And here's what they had to say about why they see AMD as the right choice for inference.
I think with AMD, we've been working for so long with them that their software stack is really, really critical. And we feel like customers are going to take up to AMD very, very well, especially in the inferencing space.
This is really intriguing, ladies and gentlemen. Listen. Oracle executive says AMD software stack is really critical. That's intriguing because if there's one weakness we've heard about AMD, it's the software stack. You know, people will say, oh, NVIDIA's got it all over them night and day. And, you know, that's a fair argument to be made. But the fact that an Oracle executive comes out and says that, I think it's very, very bullish for AMD overall. Like very, very bullish. And I think not enough people have respected AMD when it comes to the whole systems and not just being a chip.
Now, this is a vote of confidence for AMD. You're seeing shares move higher right now, whereas NVIDIA is trading lower. AMD is increasingly being seen by the marketplace as a viable competitor for inference. It does follow that news last week that OpenAI would be taking that 10% stake in Advanced Micro Devices. Now, for Oracle, buying thousands of chips, hundreds of thousands of chips, is a huge bet, as we know, for founder and chairman Larry Ellison, who is here. He's here in Vegas at the conference, and he will be speaking on stage very soon. Ellison is expected to provide more details on that $300 billion deal with OpenAI and how it is fundamentally changing how Oracle is investing and what it will take for the software giant to remain competitive with the likes of Microsoft, Amazon, and Google. He's also expected to expand on Oracle's new suite of cloud offerings that executives tell me will make their cloud computing platform more efficient and faster for their customers. And then there's Thursday, Carl. Well, we will find out how exactly Oracle will fund these massive purchases of chips. That's when the company's financial analyst day kicks off. So a lot riding on this week.
Okay, thank you, Seema. Always pay attention when Larry Ellison speaks. Seema Modi.
So it's always fun to hear, these, folks on CNBC or whoever ask these companies like, well, are you going with AMD over NVIDIA, right? First off, NVIDIA, you might not even be able to get all their chips because they have such an insane amount of demand, right? So there's something to keep in mind there. You might have to be on a backlog, a long wait time. Additionally, when it comes to NVIDIA, you're paying ridiculous pricing. So AMD is able to come on with a product comparable to NVIDIA, but ultimately, I would never call AMD's chips better than NVIDIA, but they're very comparable in terms of this next series. The 355X series is impressive, but obviously the 400 series is going to be knock the doors off. And that's going to be directly comparable to what NVIDIA is putting out there in the marketplace from everything I understand about this. And so you got to think about it in terms of all these big tech companies want AMD because AMD is going to be able to give you a comparable product at a much cheaper price. And at the end of the day, with how much these companies are starting to spend, they're starting to realize they don't have a lot left to really up those budgets in future years. They've upped these budgets such an insane amount. So much of their cash flow is going just basically to NVIDIA's pocket that at the end of the day, they're going to have to figure out something here because it's not like they don't want to continue to order infrastructure and continue to order these chips and these systems, but they would like to be able to do it with something that's insanely high end, but it's much cheaper. And that's where AMD comes in. And so that's why I always tell you guys, NVIDIA is AMD's best friend. AMD is not NVIDIA's best friend. Let me be very crystal clear about that. But NVIDIA is AMD's best friend. And the reason being is NVIDIA has shown the way, the pricing, the insane pricing, right? And AMD is able to say, okay, we're going to come in with chips comparable to what you guys have, but we're going to be able to offer it at a lot cheaper price and still make ridiculous margins that AMD's never seen before. And so get ready for AMD's gross margins, net margins to absolutely explode over the next 2 to 3 years to levels that we've never seen in that company's history, just to be quite frank, right? But AMD's not NVIDIA's best friend. I can tell Jensen is defensive on the subject. I've seen him be asked about it a few times over the last couple of weeks. He's definitely defensive. I can tell in his tonality, his word choice, he doesn't like it. AMD is not NVIDIA's friend. but I can tell you NVIDIA is AMD's best friend. It's crazy, man. Crazy, crazy. So, I mean, it's even funny. NVIDIA is saying they're going to announce and invest into OpenAI, but then OpenAI says, hey, we're actually going to invest into AMD, right? And get, or at least get shares of AMD and spend a bunch of this cash on AMD chips. Imagine being NVIDIA. Imagine being NVIDIA, giving your money to OpenAI, and then OpenAI says we're going to go spend a fortune over the next number of years on AMD chips. I'd feel a little jaded if I was Jensen. Wait a minute. I'm going to give you guys a bunch of money, and I've been giving you guys preference for all these high-end chips, and this is how you're going to repay me? You're going to go buy those AMD chips? But, you know, it is what it is. So it's fascinating in regards to how that whole market's evolving. So how do I feel as an AMD shareholder? Do I feel like I'm ready to start cashing some shares? Oh, heck no. Oh, heck no. No, thank you, okay? I understand there's a lot of volatility in the market. The market could downtrend easily over this next 2-3 months, maybe. And if that happens and AMD goes down a bit, like, that's fine. It's just another huge buying opportunity. Like AMD in the next bull cycle, don't be surprised if that goes $300-$400, maybe even $500.
Semiconductor managing director and a senior analyst. And I don't know if you were ever wondering why'd I get into this area of finance, but God, the last, couple of years, this is where it's at, Stacey. It's hard to even keep track.
It's been unbelievable. It's certainly been a ride.
I mean, it used to be, you remember memory? It used to bore you to death. I guess there were those, we used to call them field FPGAs, field programmable Gatorade, we called it, where you could pick orange.
Yeah.
You could get grape if you wanted, if you're out on the field. But they were gate arrays. Then graphics chips and CPUs, but now AI changed everything. And I don't even know. I mean, I need to go back to school to really understand it. Did you do that? Some remedial work?
Well, you know, it's my graduate work in semis is probably 20 years out of date at this point. But we've been here and there on it. Yeah.
AMD eclipses Intel. Intel's got some government help and maybe inducing some private companies to get involved, or they're public. But I mean, it's how do you navigate it at this point? What are your favorites?
Yeah, it's been pretty wild, right? And you're right. We've got winners and losers like massively changing place, and we've got government investment, if you maybe want to call it government interference, but that's there, and a lot of crosstalk between a lot of the companies, especially in the AI ecosystem. There's a lot of cross investments and things like that where it's sort of tying them all together. They'll all sink or swim, I guess, in one piece at some point. In terms of what we like, my general call this year has mostly been own the high quality AI names and ignore most of the rest. And by and large, like that's kind of worked. Like we've liked NVIDIA, we've liked Broadcom. I still think that the AI cycle, I think we're still early. I think it's still got legs, and all of these new deals that we've been seeing announced, they actually, I think, have the effect of extending it even longer. Most of these don't even start to ship until the end of next year. So if you're worried about air pockets or digestion or anything like that, it's clearly not this year. It doesn't seem like it's next year. And if these big projects don't even start to ship until the end of next year, it's probably not 2027 either. I think we've got some runway on this still. So we still like those high quality AI names.
Hey, Stacey, we have Jared Bernstein joining us in, I don't know, maybe 20 minutes. And he has an op-ed out that says he thinks it's time to call the third bubble of our century the AI bubble. He says in financial markets, a bubble occurs when the level of investment in an asset becomes persistently detached from the amount of profit that asset could plausibly generate. Why do you think?
Before we go on to AI bubble and that sort of things, did you know something I just noticed? This is big. Stacey Rascon still refused to mention AMD, right? This man has been, he's supposed to be a semiconductor expert, but he's been so negative on AMD, right? Including, I think it was in the last 6 to 9 months or so. I remember I reacted to a video with Stacey Rascon basically saying, I don't even know if we need AMD. Whoa. I said, that's ridiculous. Such a silly statement. Such a ridiculous statement. And that's got to be a big pie in his face, does it not? Now you got every single one of the most important tech companies in the world wanting to load up on AMD chips next year. Whew. And imagine you're the guy that says, I don't even know if we need them anymore. It's embarrassing. Like, it's embarrassing, right? And so Stacy Rascon just, missed it in regards to AMD. But not only missed it, it's one thing if you miss it, it's another thing if you disrespect it, right? And I feel like he really disrespected Lisa Su and AMD by saying, by that day when he went on and said, I don't even know if we need them. What are you talking about?
Well, I mean, it's certainly a concern that people do have. I think there's a few things and I think it really is that question on profitability. There's no question on demand right now, right? Nobody can get enough. That's the one sort of overarching theme that we're hearing from everybody in the space is demand for compute is off the charts. It's not like the tech bubble maybe where, I mean, we have dark fiber sitting in the ground today, from 2000, 2001. Fiber that was installed and never used. Everything is getting used. Like nobody's buying GPUs and sticking them on a shelf in a warehouse somewhere. Like they are all getting deployed and getting used and they can't get enough. So it really is that question on profitability and the revenue that this can drive. And yeah, I guess you could compare it. You could make the argument that the revenue will never be there. At the same time, though, it's still early in this. And you can look at other build-outs. Like you can look at the build-out of AWS back in the days. That required heavy investment. And it wasn't profitable at the first, and nothing's profitable when you're on the early phase of the ramp.
OpenAI says it needs at least $1 trillion to invest in data centers that provide the electricity, computing power, and storage unit, but they've only got $13 billion in profits this year, in revenues this year, not in profits.
Now, but again, we're early and we're in ramp phase, so that becomes the question: can they actually drive revenue? Is this actually going to be something that is completely ubiquitous, or is it not? And I think time will tell. We'll have to see. I tend to be more on the bullish side of AI. I actually do think the demand is there, and I think there's enough, effort chasing this that we're already seeing evidence, frankly, of at least on the enterprise side of returns. Like it's early, like it's in the experimental phase, but we're seeing evidence on the enterprise side, and then on the hyperscale side, I think there's already getting returns on this. You have to remember the folks that are building this stuff out, and this is one other difference, maybe from say 2000, 2001. The companies that are doing the bulk of the spending are some of the most well-funded and most profitable businesses that humanity has ever developed. And they're not idiots, right? And they can see things that we can't. And they've also got other businesses that they're running this stuff through that they're already getting returns on. Google's getting returns on the stuff. That is getting returns.
That sounds like it's different this time. But some of the circular financing and some of the companies that are in these weird incestuous relationships with each other where they're each dependent on the other for it reminds me a little bit. Remember the mergers back in the .com that you would exchange two overpriced cats for one overpriced dog and none of the stock was real, so none of the valuations were real. I don't know if any of that's similar, but even yesterday Pat Gelsinger said there's no doubt we're in some type of bubble, not one that's ready to pop. And maybe, I get everyone points to NVIDIA's valuation is not anywhere near stratospheric. I mean, in terms of the multiple to earnings or sales, it's not so bad.
Maybe. Look, so I'm not sure Gel's ability to speak on this, frankly, but that's neither here nor there. Like we'll
I hear you.
Okay. In terms of some of these like quote unquote circular range, I mean, look. So the biggie was NVIDIA, right? And that $100 billion number kind of raised eyebrows. Remember, it's not $100 billion right away. It's $10 billion. It's actually, at first, it's actually stayed just with the votes. So I think that's good. And look, like NVIDIA doesn't have anything else to do with their cash, right? They're generating hundreds of billions of dollars of free cash flow, right? They can't do M&A. They have a dividend and a buyback, but relative to their market cap, it's tiny. So like I'm hard-pressed to think of anything better that they could do with that cash than to grow and support the overall AI ecosystem. And the money's not going into the ether. Like they're getting what will presumably be valuable OpenAI stock. Like I guess at that point. And you have to remember, even with that $100 billion, assuming they deploy it, OpenAI is going to need a lot more money than that. Like they're not going to be the only investors in there by a mile.
So I think a big mistake OpenAI has made, in my personal opinion, is telegraphing like, oh, we need to spend $1 trillion and all this stuff. Like, if anything, that's going to freak investors out. I'm talking about people that are buying into OpenAI, in the private market over the coming years, because they're going to be like, oh gosh, like, especially if the market gets a little rough, then they're going to be like, question, like, is this worth investing into? Because they can still spend so much. I'm probably going to be diluted so much over the coming years, right? So that's something definitely to factor in my opinion. So the spend in the space is going to continue to be aggressive for the next several years. But the increased percentage is going to start to really be contracted. And if some of these stocks start to get hit a little bit, their revenue growth go down a little bit, like even talking big tech, it could actually see even a bigger wave to AMD because they're the value play in the space. You still want great performing systems, but you want it at a value. Like, there you go.
Global Advisors and Fundstrat Capital CIO. Tom, just summarizing what your thoughts are this morning. I don't see a whole lot that has shaken your confidence that the market's headed up. You still see 7,000 on the S&P by year end. You do point out it's not cheap, up 36% since the April lows. You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Yeah, you've got.
So I spoke about this. He mentioned this 27 times on NVIDIA, but it looks like he's talking about a 2-year out forward piece. So that's something to keep in mind.
Positive.
Because NVIDIA still needs to finish up their fiscal year, then go through another fiscal year, and then we can talk about that 27 forward P.
Reasons to think that earnings are going to do well in a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
Still got, we're not overly positive in terms of sentiment right now. So that's not late cycle, according to you, at this point. And still a hated rally, $7 trillion on the sidelines if people decide they want to go into stocks.
Yeah, I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
You have found a kind of everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago. And that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto, and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that think that's safe, but when the price of that collateral drops, it triggers a cascade. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
So the moral of that story there, and what's really scary, in my opinion, is if you get into the market when you start getting the financial markets actually really fearful, which we haven't reached that stage yet, but if you get this market to really start getting shaken up, right, where you get into a phenomenon like I ran through with 2018, where you start getting lower highs and lower lows, lower highs and lower lows, right, as the weeks tick on, then you get in a situation where you could start to have a lot of panic, people freaking out, wanting to sell aggressively, and then you get even lower lows, lower highs, right? And that could make for a dynamic where you get some great pricing on some assets out there, but you get a lot of pain short term, right? And, something like Bitcoin maybe goes 75K, 70K, something like that, in a pretty quick amount of time. And then something like Ethereum can go from 4,000 to 3,000. Like, it can happen pretty quick in regards to the financial markets when it starts that cascading kind of selling market. You need more reasons to be fear. You need the government shutdown to continue to go longer, right? You need more worries about AI and how much is AI spend going to go up next year and who's actually making money from this, right? You need some more worries about the economy. Are earnings going to be there? Because if earnings aren't really there for the top of the market, right? If businesses pull back a little bit, if the consumer pulls a little bit back, like all it takes is companies to miss by 1% here, 1% there in regards to revenues. And next thing you know, those stocks start going down. You just kind of get this kind of ugly market in the short term, right? So just something to factor in there, okay? I appreciate you guys for joining me as always. Thank you so much for being here. Once again, as I let you guys know, starting in January, to get inside my private group, it'll be minimum $100,000 net worth. So if you want to join inside my private group, get access to all my course curriculums, access to Discord chat, access to see exclusive weekly videos, the moves I'm making, and my nearly $4 million Fidelity account, all that good stuff. Pin comment down there. We got 2,500 members in there roughly, okay? Much love and have a great day.